Hey guys, Spenny here. So in today's video, we're going to talk about why Palantir insiders sold. A lot of us know that they sold, but not a lot of people understand why they sold. So in today's video, I'm going to be debunking that for you. I'm also going to play a clip of Warren Buffett. Warren Buffett explains some of the risk with IPOs, and he goes into details about insider selling. I think it's a very important clip if you're new to investing or you just don't fully understand IPOs. This is really going to help you out a lot. So let's get straight into this video and debunk what's been going on. So Palantir insiders have sold over 24 million shares since the share lockup expiration in February. One insider sold over 97% of his entire holdings. But this may not be a precursor for upcoming shareholder woes. Long-term investors may want to consider accumulating Palantir shares on this price correction. The stock is actually reasonably valued compared to its peers and has potential to rally going forward. So Palantir shares started trading on the New York Stock Exchange back in September 2020, but a certain group of shareholders weren't allowed to sell their shares until February 18th, 2021, as part of their share lockup agreement. As we approach this cutoff date, the general expectation was that Palantir's locked investors would begin selling shares, and this fresh supply of shares would weigh on the price for some time. And of course, this is exactly what happened. On this chart, you can see from the peak to the bottom, we lost almost 55%. That is more than a correction, that's an outright crash. Absolutely massive drop. But this drop isn't just because insiders sold. Palantir was also in the Wall Street bets community, so it got pumped really fast. And the faster stock goes up, the faster it's going to drop. And that's exactly what we saw. We saw it drop because it was in the Wall Street bets community, and the timing with the insider selling didn't help. So really harsh correction we saw, almost 55%. But that's behind us now, and we want to know, what about now and what about the future? Is it good to buy moving forward? Well, I'm going to play you guys a clip of Warren Buffett. He explains IPOs, and he explains why he actually doesn't buy IPOs. It's a super important, about a 1-minute clip, and then we'll carry on further after I play this clip for you guys.
Let's talk about some of the IPOs that have been coming to market recently, because there has been a bit of a fervor. Many of these IPOs have done very well, although not all of them. Lyft shares are under pressure. Uber comes to market this week, and Warren, you mentioned this weekend, and you talked once again about how you had looked at Uber about 18 months ago and passed on that. What do you think about Uber coming to market now?
Well, because I looked at it, I really don't want to discuss Uber, and I don't have any special feelings about it than any other that coming to market. But I would say that in 54 years, well, I don't think Berkshire's ever bought a new issue. I mean, the idea of saying the best place in the world I can put my money is something where all the selling incentives are there, commissions are higher, you know, the animal spirits are rising. I mean, that's going to be better than 1,000 other things I can buy where there is no similar selling enthusiasm and the desire to get the deal done and extra commissions. That's the single best thing to buy on a given day. I mean, it's
I can't think of a time we've ever done it.
Yeah.
Ever bought an IPO?
Yeah, never bought one.
No.
Okay guys, that's one of my favorite clips of Warren Buffett explaining why he doesn't invest in IPOs. I've read many of Warren Buffett books and Peter Lynch's books where they explain why they don't invest in IPOs. So I was already well aware of this before I even started investing. I should note though, I don't actually think Warren Buffett has written any books, but people such as his wife and different investors who are very close to Buffett have written books around Warren about how he invests and some of his beliefs. So yeah, this belief that you shouldn't invest in IPOs is really common amongst a lot of smart investors, but not enough retail investors understand the risk. So we're going to continue on this article, and we're going to figure out, should we buy or should we wait, because this is still technically pretty recent IPO. So there are two contrasting views on this sell-off. First, these insiders have every right to book profits like all other investors. The lockup agreement prohibited these insiders to sell their holdings until February 18th, and they're well within their rights to pocket some gains post this cutoff date. Also, like all other retail investors, they're not mandated by the SEC to justify why they're selling their shares. Some could be booking profits to accumulate wealth, while others could be funding for retirement accounts, so there's nothing fraudulent with these shares sold. At the same time, the optics of these share sales are rather poor. The fact that its co-founder decided to sell 97% of his shares suggests that he isn't too enthusiastic about the company's future prospects or foresees upcoming problems. Other insiders sold shares as well, to a lesser extent though, which doesn't inspire much confidence for investing community either. Maybe these insiders were really eager to book profits for personal reasons, or they're forecasting Palantir shares to stagnant/decline in value in the coming months. There's another grave possibility. Maybe these insiders know that they will continue to be rewarded with more shares as part of their compensation packages. So they were quite active with their recent rounds of share sales. I had actually explained in my previous article about the continuously high stock-based compensation expenses, and these are red flags, and the guy, I guess, has already talked about this in another article. So Palantir does have a very high share-based compensation, and when a company has recently IPO'd, this is going to put some down pressure on the stock. And I also think if I was an insider in Palantir, you just became public, you own all of these shares, of course you're gonna sell. And you're especially gonna sell if you have a large compensation package where you know you're gonna get more shares for free. So it makes entire sense, and to me it's definitely not a lack of confidence in the company. It just makes complete logical sense for these people to sell. I understand that some people could argue, well, why don't they just hold it if they think it's going higher? The thing is, they were selling when Wall Street Bets was pumping this stock up. So anyways, I'm really not worried about it. The stock was being pumped. It's a recent IPO. Makes complete sense that they sold their shares. It's just something to be aware of, that this could continue on in the future. I think to a lesser extent though, I think why we saw such a harsh sell-off is because of the pump that was going on at that time. Now, the next part of this article, he says, what should you do? I'd like to emphasize that this selling was a largely expected event, as its insiders finally got a chance to sell their shares and book profits. This doesn't necessarily point to upcoming shareholder woes. If these insiders continue to sell their shares over the next few months, then that might be a cause of concern. But we're not there yet. So I don't think investors should be worried about this development just yet. Again, I think we will see more insider selling. That's honestly just fully inevitable with a newly publicly traded company, but I think it's going to be to a lesser extent moving forward. And then to finish off this article, he is actually bullish on the company. So he says, the way I see things, Palantir is still a high growth company. I explained in a prior article that the company is ramping up its sales team and switching to a customer-friendly payment model, which is likely going to bolster its commercial segment sales in the coming quarters. That hasn't changed with these insider sales. And so I continue to be bullish on Palantir. So anyways, guys, just wanted to make this video for you to help clarify a lot of the insider selling concerns. In my opinion, this is completely common amongst IPOs. It's a risk you take when you invest into any IPO. And what really offsets this is that Palantir is a great growth stock for the next 30 years. We should see more than a 30% growth rate for the next decade at the very least. And to me, this kind of offsets the short-term risk. But you should also consider maybe not going fully in right now. It's a really nice dollar cost average stock, and that's how I'm gonna treat it. It's a long-term play. I'm not super anxious to build out my full position right now. I recognize that there could be downside, and there's obviously a lot of upside. And so I'll get that average price by just investing every month over the next coming years. Anyways, guys, hope you enjoyed the video. Make sure to smash that thumbs up button if you liked it. Feel free to subscribe if you want to see more content like this, and I'll see you guys on the next video.
Liable.